There's a storm brewing in the world of tech, and it's got a name that sounds like it's straight out of a disaster movie, the SaaS Apocalypse. It's a pretty dramatic name for a seriously dramatic event, where the sudden rise of AI has basically slapped a giant $400 billion question mark on the future of the entire software industry. So, let's get into it and figure out what is really going on. So here's the game plan. First, we're going to look at the market crash that set off all the alarm bells. Then we'll dive into the two big arguments. Is this the end of the world for software, or is it a golden opportunity? After that, we'll get to the real heart of the matter, this big shift to AI agents. And finally, we'll look at the brand new strategies and, of course, the new challenges this whole thing creates.
All right, first up, the event that sent Wall Street into a complete and total panic.
I just want you to let that number sink in for a second. $400 billion. That's how much value just poof vanished from software companies in a single week. This isn't just a little dip, you know? This is a seismic shockwave, and it tells you just how rattled investors really are.
And this chart really paints a stark picture. While the rest of the market, the S&P 500, was kind of just humming along, the software index, that's IGV, just nosedived almost 9%. So this wasn't the entire market having a bad week. No, this was investors specifically zeroing in on software stocks and hitting the sell button. The big question is, why?
Which brings us right to that first argument, the SaaS Apocalypse. This is the pessimistic view, and it explains the deep-seated fears that are driving this massive sell-off.
This quote from investor Brad Gerstner absolutely nails it. See, the problem isn't that people think Salesforce or Adobe are going to go out of business tomorrow. The real problem is uncertainty. For the last 20 years, software has been this beautifully predictable high-growth machine, and AI just came in and smashed that crystal ball.
Okay, so here's the nuts and bolts of how these companies are valued. In the old world, you'd pay a crazy premium for software stocks, like 30, 35 times their profit, because you could bet on decades of solid growth. But now, in this new world, what if AI shrinks that growth timeline down to just 1 decade instead of several? Well, if that happens, then the price you paid yesterday is suddenly way, way too high. And that simple, terrifying thought is what's causing the panic.
But, of course, that is only one side of the coin. Because while investors are running for the exits, the CEOs of these exact same companies, they're actually surprisingly optimistic.
I mean, you literally could not get a more different take than this one from Box CEO Aaron Levie. He's not seeing a threat. He's looking at this and seeing the single greatest opportunity in the entire history of cloud software. The argument from inside the building is that AI isn't here to replace them. It's here to give them a massive upgrade.
And here's why they feel so good about their chances. They believe they have this huge incumbent advantage. For one, they can just build these new AI agents right on top of the platforms everyone already uses. But even more important, they control the data. Think about it. Salesforce has all of your company's customer data. That's a massive competitive moat. In fact, Salesforce's CEO, Marc Benioff, is already pointing out that their new AI product, something called Agentforce, is the fastest growing product in the history of the company.
So, we have two completely opposite takes. Investors are panicking, CEOs are celebrating. Who's right? Well, the truth might be that both sides are kind of missing the real story here. The fundamental shift isn't about whether old software lives or dies, it's about what software is becoming. It's not just a tool anymore, it's becoming the worker.
This quote right here is everything. It just perfectly sums up the change. For decades, we bought software licenses, we called them seats, for our employees to sit in and use. Now, we're starting to buy AI agents to actually do the work for us. This is a total transformation of the entire business model.
Let's just break that down side by side. The old model was so simple. You've got 100 employees, you buy 100 licenses. It was basically a tax on human productivity. The new model couldn't be more different. You're not paying for the tool, you're paying for the result. You're getting charged per task the agent completes, or per API call it makes. You're literally buying the automated work itself.
And if you think you can just sit this one out, well, OpenAI's CEO Sam Altman has some news for you. This isn't optional. It doesn't matter what your company does, the future is making sure your service is available through an API so these new AI agents can plug into it and use it. It is a foundational change for the whole economy.
Okay, so a shift this massive obviously brings a whole new world of challenges, and it means everyone needs a new playbook. So let's take a look at how the industry is already starting to adapt to this new agent-driven reality.
This table gives us a really fascinating glimpse into the new strategies that are popping up. Microsoft knows it probably can't compete with OpenAI on building the absolute fastest, most cutting-edge AI model. So what's their move? They pivot. They're telling their sales teams to stop talking about speed and start talking about what massive companies actually care about: security and compliance. They're not selling the fastest car, they're selling the safest one. A secure, managed platform for agents. And they're letting the startups handle the bleeding edge.
And that focus on security? Yeah, that's not just some corporate buzzword. It's for a very, very good reason. I mean, when software isn't just a passive tool anymore, but an active agent that can do things on its own, like apply for jobs or access your company's data, the security risks just go through the roof. A recent audit of one of these agent platforms, OpenClaw, found that hundreds of the available skills actually had malicious code hidden inside. This is a brand new and, frankly, a pretty scary frontier for cybersecurity.
And that brings us right back to where we started, to that $400 billion question. The entire software industry, for decades, was built on selling tools for humans to use. But if that very foundation is cracking, if software is now becoming the worker itself, how in the world do you put a price on that? It's that uncertainty that's shaking the market to its core, and it leaves all of us with a huge question. In the age of AI, what is a piece of software truly worth?